Hello and welcome to another update video about Ethereum. In this video we want to talk about the current primary wave count, the alternative which is getting more likely, and also I would like to share with you another idea I had about a wave count, maybe to prepare you for what's coming, further choppy price action, but that's something that I see could potentially be developing. It's not a primary count I use at the moment, but certainly one that I don't find unlikely. Okay, so we want to talk about that. Okay, so let's talk about my primary count for Ethereum. I'm not going to talk a lot about the underlying structure because we've done it quite a lot and not much happened overall. But the idea is still that Ethereum peaked here in April in a wave 1. Since then, we've been coming down in a wave 2. The idea is currently we are still in a wave 2. Even if we push a little bit higher here, it would not invalidate a more bearish outcome short term, which would mean another low in the support area. The idea is that in this wave 2, we're currently coming down in a so-called WXY correction. In this Y wave, we have an A wave. The B wave could have peaked already, and with a C wave to the downside. This, until yesterday, has been a very likely count. Price pushed slightly above the pivot point. So it pushed slightly above resistance here of $1,900, which did not invalidate this count because we could still be on our way down here in a C wave of wave Y of wave 2. And we're simply doing this C wave as an ending diagonal in a wave 1, 2, and then A, B, C in wave 3, 4, 5. However, with the push above $1,900, this became a little bit less likely, however, not invalidated. Invalidation will only occur above 1918, as I said yesterday. So this is still a valid count. However, it is starting to morph into a different count. The different count simply allows for a little bit more upside in an extended B wave, but would not invalidate the overall idea of another low into support. Yeah, and we have to assume that we will get another low as long as we don't get 5 waves up of the low. If we have 5 waves up of the recent low here on the 12th of May, we have to assume we have bottomed. So it's a very, very objective process here, not biased, just purely looking at the facts in the chart. We can recognize the potential at the moment that Ethereum might have bottomed and may include that in our trading strategy. But I've said that over the last few weeks that Ethereum could have bottomed already. So, you know, you can make the right choices for your own portfolio based on that. But it's just not the primary expectation because it is simply not, the impulse is simply not there. Ethereum has not formed an impulse off the lows. So this is only a 3-wave move up. It's a 3-wave move down. It's a 3-wave move up. We have a 3-wave move up of the 12th of May low that does not give us any breakout structure. We would need to see an impulse, okay, or at least a larger leading diagonal, which would look like this. We need 5 waves up. We don't have 5 waves. And without 5 waves up, I cannot assume that Ethereum has bottomed, at least not primarily. I recognize the potential, but the chart would need to prove it by filling in 5 waves and then following through by making 3 waves down, which would be another trade setup, okay? So the idea is if anybody thinks he or she missed anything, there will be a 3-wave pullback afterwards anyway to provide another possible entry point. Yeah, so if we break above 1918, which would be invalidation for the direct downside path, that B wave might extend in a WXY structure, might go a little higher, and could even go all the way up to $2,040. We talked about that in yesterday's video. But first of all, we need to break 1918 to make that a likely option, or a very likely option and preferred option. We're looking here then at a target range sort of around, 1940 could be the start, but this is probably a little bit low. So 1970 is a 78.6 retracement extension. That's certainly a level, $2,000 and 2040 as levels of interest for this B wave. So this is the current count, yeah, still preferred to the downside. If we break 1918, it can go a little higher, but would probably not be bullish until we see 5 waves up, okay? So we would just look at an extended correction. Now, I did have another idea. And that would include the idea, now let me think if I can label that correctly. that would include the idea that we are not here in a that we are in a WXY correction, yes, indeed, but that the X wave is unfolding as a triangle. Yeah, this allows for more of a choppy price action to sideways. So basically it could be that off this low here, we formed an A wave to the upside, the first wave of a triangle. This was a B wave low, basically in a running triangle, which makes a new price extreme to the downside. This could be a C wave. We might still be working on a D wave to the downside and could then get an E wave later, which is where the X wave would top and then we would come down. But this is a bit speculative. However, it's a scenario worth following or at least knowing about, which would allow for further sideways action over the coming weeks. And as I said in the Bitcoin video, it might be that we don't get a real breakout of this correction or final breakdown, which we would like to see, until we had the next Fed meeting, which could be the next catalyst, or CPI data, inflation data. This is sort of the situation on the Ethereum chart. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.